A very good morning and a happy Monday. Welcome to today's episode of Morning Wealth. Three things we will talk about. S&P 500 passed 4,000 for the first time. Strong US jobs data and Tesla smashes on the deliveries front. A strong US market propelled the S&P 500 past the 4,000 mark for the first time on Thursday. The broad market index has surged 80% from the low point of its crash last March when the virus outbreak exploded. That while weekly jobless claims are still more than 3 times their pre-pandemic level in the US, but more about jobs later. For the day itself, which is Thursday, tech stocks continued to mount a comeback following a largely weak first quarter performance. Chip stocks in particular soared, with the semiconductor index jumping about 3.7% by the closing bell. Chip-making giant TSMC broadcast plans to spend about $100 billion over the next 3 years to beef up its manufacturing abilities as the world copes with a severe production shortage of chip products. That is especially good news for companies that make production equipment like Applied Materials and Lam Research. On average, they gained about 6.1% for the day. The S&P 500 closed above 4,000 for the first time to kick off the second quarter, buoyed by continued rebound in the technology stocks. Despite the sector rotation in the market that we are seeing lately, tech stocks were the biggest drivers of the S&P 500's latest 1,000 point milestone. 5 stocks, which is Apple, Microsoft, Amazon, Facebook and Alphabet, contributed 44% of the gains. This is according to S&P 500 Dow Jones indices. The S&P 500 jumped 1.2% to close at 4020 after closing out a fourth consecutive quarterly advance on Wednesday. It took just about 434 trading days for the index to set its latest 1,000 point milestone, far fewer than the 1,227 trading it needed to climb to 3,000 from 2,000. The Nasdaq was up 1.8% and the Dow Jones was also up about 0.5%. The yield on the 10-year Treasury slipped to about 1.68 from 1.74 on Wednesday. That was the largest one-day drop since November. So all of that helped in pushing the technology higher. Onto the jobs front, the V-shaped rebound from last year's pandemic shutdowns flattened last fall as stimulus faded, infections rose and restrictions returned. The V is now back. Almost every key labor market indicator turned green in March. Payrolls, both total, which added about 916K, and private, which added about 780K, rose strongly and by more than what the economists had expected. Prior months were also revised up. Unemployment rate fell to 6% from 6.2%. Labor force participation also rose a tad to about 61.5 from 61.4 as more people felt safe looking for work. Almost every major sector grew, led by leisure and hospitality as restrictions were lifted. Government as in-person teaching resumed in many states. And construction, which was up even after February's weather-induced drop. The average work week lengthened to about 34.9 from 34.6 hours. On the negatives, hourly earnings slipped as lower paid occupations outperformed. Average hourly earnings growth declined, which was a complete surprise. Economists had anticipated a modest 0.1% increase, but wages dropped for the first time since June. On top of that, the percentage of people on long-term unemployment rose to about 43.4 from 41.5. But overall, the jobs data was fantastic, which should support the reflation trade. Keeping with data, factories around the world are struggling to keep up with the soaring demand for all types of goods as the global economic recovery from the pandemic accelerates. In the US, factory production and product sales soared in March, according to the ISM Industry Trade Group. Its index for factory activity, a measure that takes into account new orders for goods production, inventory levels, and commodity prices, rose to 64.7 last month from 60.8 in February. Any figure above 50 suggests industry expansion. Obviously, we're doing much better. The expansion, largely driven by American consumers venturing out in public again, armed with government stimulus money, was broad-based, with demand rising from every major industry from restaurants to chemical companies. The resurgent global economy led by the US will likely drive the world trade higher this year, despite a series of acute disruptions to already strained supply chains, including last week's blockage of the Suez Canal. In the Eurozone, factory activity grew at the fastest pace in at least 2 decades. This is according to the forecasting firm IHS Market. The Purchasing Manager Index for the area rose 62 in March from 57 a month earlier. China, the world's number 2 economy and a major global exporter, had trouble keeping up with the rise in demand last month as supply chain disruptions impeded the flow of goods. The country's factory sector growth eased slightly last month, according to IHS Market. Lastly, on Tesla Inc.'s estimate smashing deliveries of electric vehicles in the first quarter suggests boss Elon Musk bet on growth in China and Europe is starting to pay off. The results marked a strong start for the year in which Musk, the company's chief executive officer, is counting on global operations to help scale up production and sales. Tesla delivered 184,800 cars worldwide in the year's first 3 months, trouncing an average estimate of about 169,850. This is according to Bloomberg survey of analysts, and beating the fourth quarter figure as well by about 4,000 vehicles. The quarter was a massive home run in the eyes of the bulls, said Dan Ives at Wedbush. We believe China and Europe are particularly robust this quarter, as trajectory now puts Musk to exceed about 850K for the year, which is well ahead of the whisper expectations, is what he writes. Musk is pushing into China, already the world's largest automotive market, including for EVs, to gain a foothold among competition from local electric vehicle startups as well as from Volkswagen. Auto sales are forecast to rise in the nation this year for the first time since 2017, and in March, Premier Li Ka-shing told National People Congress the government will help boost the number of EV charging stations and battery swapping facilities. Tesla's volume stands apart from most other automakers, who mainly are showing declines in part because of the electronic chip constraints, is what an analyst at Jefferies wrote. That's the update. Stay safe and healthy. Won't be doing an episode tomorrow, so I'll speak to you on Wednesday. Thank you very much.